Hello, my name is Emilie Pechette, and I have been working as a certified financial analyst for the last 15 weeks in building a portfolio for a very successful client. So the client I have built a portfolio for is a single yet hardworking engineer who makes a very above average salary of $225,000 a year. She is financially conservative and very comfortable with her lifestyle, so she'd like to keep it that way, obviously, by investing not too much money and not taking on too much risk. So the amount this woman has to invest is $1 million and is willing to take on some risk if that brings about a high return. So just like any manager, I want to provide my client with the most compatible investments on the market so that she can reach her financial objectives. So knowing that our client is self-proclaimed conservative financially, I focused on investments for her portfolio that have the potential to provide a high rate of return while also moderating the overall risk associated with these investments. So the equity funds selected for the portfolio have varying levels of risk, allowing for aggressive growth potential while being balanced out with the funds that have a history of a lower yet steady rate of return. The bonds and money market investments are very low-risk investments that provide a modest return but provide additional financial stability to offset some of the risk associated with the equity fund investments. So with that being said, I had $1 million to invest in 10 investments. These 10 investments were my choice, and I did some extensive research to make sure that they somewhat went with the overall objectives of the client. So those investments included 2 mutual funds, so one called Colombian Seligman Global Technology Fund Institutional Class, coded CSGZX, and that one was probably one of my favorite to research because I've never actually looked into a mutual fund, and it made more sense to me to involve mutual funds for this particular client. And then along with that mutual fund, I did another one coded INPIX, so INPIX, called Pro Funds Internet Ultra Sector Fund Investor Class. And this one actually was the most interesting when charted out for the 15-week period because it had a very high steady growth, but then towards the end, around week 10, it had a very significant dip. And it went from around 93 to 89 in 1 month, and that was a very significant dip and outmatched the others investments in the portfolio. But then towards the last 5 weeks, it definitely started to increase rapidly and then start to plateau. So it ended up okay for my client. So moving on, I also did a real estate investment trust, or REIT, called Parex. And it was the T. Rowe Price Real Estate Fund Advisor class. The next investment was a small capital growth investment called Nuveen Small Cap Growth Opportunities Fund Class R6. And then I moved on to Treasury bill because of the significant safety net it kind of offers. At least that's what I kind of felt as researching it. I thought it would be somewhat good for the diversity of the portfolio. And that one was the 13-week Treasury bill. And then something new to my knowledge was an emerging markets conglomerate called JD.com Incorporated, and that was a very interesting company to research. And then the last 3 did very well personally as personal investments, and so one was coded ANIMA, and it was a global currency. The next one was the money market account called QCMMIX. And then we had CBO Global Markets Incorporated, which was probably my favorite overall investment to look at, coded TNX. And this one did really well. It offered a very huge variety of products and was very interesting to research. So all of them, when charted, had some very steady growth in the first, I'd say, 10 weeks, and then they all kind of round the same 3 months, I would say, from month 9 to month 11, all had the same type of dip in the market, and then eventually gradually finished the last 15 weeks out very strong. So the overall portfolio earned a 9.17%, which I was very pleased with, as this is my first time acting as a financial analyst. And I obviously learned a lot from managing assets, especially assets that I'm not really, aware of before this class. So one big takeaway is that the research is volatile when managing assets because you are treating another person's money, and you need to know how to explain and justify any questions that the client may have about your choices you've made. I know early on when talking about in the discussion boards, I had to really reflect on why I chose these investments and do more research on the go. That was something I took away from this assignment. And then another aspect I learned was that some of the investments that I felt were safer than others ended up disappointing me in the end. So, for example, I thought that the Treasury bill might have been like one that was just going to, give me some steady growth, but they also didn't do as well as I thought it could have. This taught me that the market is always going to change no matter what. And yes, we are allowed to make assumptions, but when dealing with $1 million and other people's money, your assumptions as a manager should nearly be 100% correct. I found that this profession could be both very frustrating and rewarding at the same time. And I think that watching the growth of different assets is something we can all learn from, especially finance majors, because it gives you an overall visual orientation of your decisions in a performance metric. So I know that my biggest takeaway was actually, yes, writing the paper, but also looking at every single investment's graph on Excel and building charts and seeing how they gradually increased and then what went wrong and like how they compared. It kind of made me think like as if I was on my client's side to see how comfortable I would be with the investments overall. So other than that, I thought it was a great project and I learned quite a bit, and I'm very happy with the investments I made. Yes, with a 9.17% return. Might not be the highest, but it definitely was positive. So that was a good first semester for me.